On today's episode, we are going to take a quick look at 4 stocks I'm thinking of buying this week. Like most of you, I put money to work on a weekly basis, so every single week I'm looking for either new investments or old investments to increase my overall exposure. So these are 4 stocks. I either buy between 2 of them or sometimes all of them. If you want to know when I buy, feel free to join my Discord channel. It's free to anybody that wants to join. I post every time I buy and sell there. So on today's episode, I'm just going to do a quick recap. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So the first company we're going to take a quick look at is Autodesk. And Autodesk is a software company. I did a little bit more in-depth analysis yesterday, taking a quick look at all their fundamentals, and things are looking pretty strong. Make sure to check out that video. But Autodesk, they are a 3D modeling software that's used in 3 major sectors. First is the architecture, engineering, and construction. If you are kind of designing a building, a bridge, something in that market, you're going to be using Autodesk. I have a great friend of mine who right now, this is pretty much, they work in a civil engineering firm. Autodesk is all they use. I come from an engineering background, and this is probably one of the main softwares learned through all types of engineering genres. The second market they hit is the product design and manufacturing. Let's say you're trying to make a new phone, you're trying to make a new car, you're trying to design something. You're most likely going to use Autodesk. And finally is the media and entertainment. If you're making some form of cartoons, animation studios, 3D modeling for a game, for some game character, you're most likely using Autodesk Maya or some of their other 3D modeling softwares. So Autodesk has a great market, in my opinion. We can see from its 52-week high, the stock has definitely seen better days. After reporting earnings, the stock is down about 15.64%. So definitely seen better days. We're going to see things are looking pretty attractive. The main reason this company saw this kind of decline after earnings, I want to say, is kind of uncalled for, but unfortunately it's what the market is seeing right now. Even though their guidance, their earnings, and their guidance for next quarter, guidance for the full year, and this full earnings all meet expectations, they didn't blow anybody's mind out, right? So because they didn't beat expectations dramatically, they just met them. I do believe that's the main reason the stock price dropped. And unfortunately, that's the market we're in right now. Unless you're beating expectations by huge margins, the company's stock price tends to drop after earnings. Next, another reason after that, we did see a bit of price decrease from analysts. So that form of bearish sentiment a little bit kind of brought that negativity to the stock price. If we take a look at their earnings, right? I mean, for the full year of for quarter 2, they saw growth in all their markets. The architecture, engineering, construction, the manufacturing, the media and entertainment. So they're seeing strong growth, and they're seeing strong growth in all their geographic regions as well. So overall, I'm super excited about Autodesk right now. And right now, it's actually not in my portfolio, and I am debating if this should be a new buy in my portfolio. I'm still not sure. The second stock we're going to take a quick look at is Cerence. This is a tier 1 stock. This is one of my biggest, it's one of my top 5 positions in my portfolio. But before we take a quick look at Sorens, guys, let's take a quick listen to today's sponsor. A great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Sorens is traded under the Nasdaq as ticker CRNC. It's currently sitting at $111, and this is probably my smallest market cap company that holds such a big percentage in my portfolio. It has a market cap of 4.24. We can see from its 52-week high, the stock is down about 16.4%. Definitely seen better days, but it's not being down as some of these other stocks. So Sorens, they pretty much make conversational AI products that unite the transportation world, and they're also kind of entering other markets. markets. Some of their automobile companies, as we see right here, are some of the big players. They have huge tier 1 players as their customers. We can see great names all around. They're hitting, for example, pretty much the main vehicles, the four-wheelers. They're also hitting the two-wheeler platforms. They have cloud services, cloud technologies. They're also beyond voice, and they're also entering the building platform. So elevators is one of the markets they're trying to hit, which I think is pretty impressive. So pretty much if you have some form of smart co-pilot or smart assistance in your vehicle, by one way or another, is probably powered through Cerence. So we can see 53% of worldwide auto productions come with Cerence technologies in the past trailing 12 months. That is insane. 81% of their revenue is repeatable software revenue. Their average contracts are about 6.8 years long. I mean, strong numbers all around. Some notable events supported business momentum that they're seeing in this most recent quarter. First, they had a record numbers of startup productions in the quarter, supported by a record number of OEMs. They have strategic partnerships that they mentioned earlier this quarter. One with Sirius XM, another one was Harman, and the other one was Visteon, to award two-wheeler business for major motorcycle manufacturer. They were also added to the mid-cap 400 index. So overall, this company is seeing great partnerships with some strong players, kind of improving that conversational AI. And I do believe the conversational AI platform is going to continue to grow outside of the vehicle world and into other products as well. So their most recent revenue grew 29% compared to same time last year, so some strong growth. But remember, same time last year, there might have been a slowdown in kind of car productions, which do affect a bit for the company. I do want to say one thing to keep in mind of right now is the overall chip shortage still kind of affecting this company still. So hopefully once that stuff gets over, it will be a nice catalyst for the company. But a good portion of this revenue comes from licensing deals, and that was up 54% compared to the same time last year. Connected services was up 19%, and those two segments make up roughly 80%, a little bit more than 80% of total revenue. They also have professional services, and this is the other, I want to say 20 or so percent. This is if you need an engineer to kind of develop some form of AI platform for your product, you kind of hire some of their engineers. They also gave us revenue guidance for the upcoming quarter, which is going to be quarter 4, and revenue growth is only about 6 to 11%. So I want to say this is not a huge growth story company, but I believe the overall AI market is still especially AI voice, is still in early stages. That maybe right now it's not growing at crazy levels, but once it starts to expand into other markets, I can see this growing at some impressive levels. If we take a look, Sorens, after they reported earnings, a lot of price target updates. We see some as high as 150, 146, 140, 134, 122, 141, 145. And remember, Cerence right now is sitting at $111. So pretty excited about Cerence. The third stock we're going to take a quick look at is Roku. Roku right now is traded under the NASDAQ as ticker ROKU. We can see from its 52-week high, the stock is down about 28.62%. So it's definitely seen quite a beating. We can see, I mean, some of their most recent earnings, strong metrics all around, in my opinion, right? Active accounts were up 28% year over year. Streaming hours were up 19% year over year. Average revenue per users were up 46%. Total revenue was up 81% year over year. So this is growing at crazy levels compared to same time last year. And same time last year, there were more lockdowns. There were more people kind of staying at home to kind of overall improve all this. So for them to still see strong revenue growth, year-over-year growth, in my opinion, it's amazing. I do want to say I understand why the stock price has dropped. Certain investors, right, we're seeing a slowdown in streaming hours, but I believe that's to be expected, right? Things are opening back up, so there was a decrease there. Another thing I do want to mention is the outlook they gave for the upcoming quarter. It might not be as strong as investors would have hoped. Another thing is their adjusted EBITDA is a little bit short compared to what they made this quarter. So quarter-to-quarter growth is slowing down dramatically. Year-over-year growth still kind of strong, but I can definitely see why investors got a little bit spooked out about it. But overall, I think Roku's looking pretty good. This is in my portfolio right now. We can see one of the, I think this is probably one of the biggest things investors should look at, right? TV viewing hours compared to same time last year actually dropped 19%. Roku's viewing hours actually grew 19%. So the rest of the market is seeing a huge decline in viewing hours, even though Roku is not. So I believe this is one of the most important charts to look at. Another thing we can see is Roku is just doing great with the original content as well. They are expanding there. So Roku, I believe, is one to definitely keep an eye out, especially at these levels. Some recent news, right? Actually, to yesterday when the market was closed, Roku announced that it is launching its player in Germany, and this would be the second big European rollout, which is pretty impressive. Right now, parts of Europe are still experiencing heavy lockdowns, so I can definitely see huge growth coming from this Germany expansion. The final company we are going to take a quick look at is Shopify. And this one I want to say is probably the most expensive. We're going to take a quick look at technicals and valuations in a bit. I want to say Shopify is the most expensive, but I wouldn't mind increasing my exposure. This is a stock that I just want to grow my portfolio a little bit more with. So right now, Shopify is sitting at about $1,554. We can see from its 52-week high, the stock isn't down too much. It's down about 5.42%. Shopify, for those that are not familiar with Shopify, they are pretty much our one-stop shop if you're looking to kind of open some form of online e-commerce. They help you kind of set up your one platform for every channel. They do everything from payments, capital, marketing, analytics, apps, inventory, fulfillment, order management, shipping, to kind of entering your store into all these types of platforms. Let's say you want to enter the brick and mortar. Let's say you want to open some form of e-commerce in a specific social platform. Shopify is the easiest place to do that and to power it all. So overall, the company is seeing strong growth. We can see they are the number 2 in the shares of US retail e-commerce sales for 2020. So overall, this is definitely a big player. Revenue is up 57% compared to the same time last year. Merchant solutions continue to grow. Subscription solutions continue to grow. And this is impressive, right? In just quarter two, they almost made more than 33% of the total revenue they made in the full year of 2020. So in one quarter alone, they made more than a third of what they made the full year of 2020. I think that's pretty impressive. We're seeing strong growth numbers there. So right now, I do want to say Shopify did announce some awesome news recently on August 24th. Shopify introduces an in-app shopping on TikTok to drive e-commerce sales. So if you are using TikTok and you see some form of product and you can kind of buy it, it's most likely going to be powered some way with Shopify. I think that's a great move. We see TikTok being super popular right now. So a great move for overall Shopify to increase their overall e-commerce market. So now let's take a quick look at valuation metrics. Let's see how these stocks are looking right now. I'm kind of just taking a quick look at forward price to sales ratio. I want to say none of them are sitting at its peak, which is great, but I want to say none of them are really kind of screaming a form of cheapness right now. The only two I want to say would be Autodesk right now, that has taken a nice dive after the recent drop, and Roku as well, right? Roku sitting at a forward price to sales ratio of around 11.89. Cerence and Shopify are a bit expensive. They're almost a little bit on their higher end, but I think it's understandable due to the market that they're in right now and how they are growing. So at the same time, now let's take a quick look at technicals. Autodesk definitely not overextended, sitting at attractive levels. Roku not overextended, sitting at attractive levels. So those, like I mentioned, the first two that I mentioned in form valuation metrics, that have seen quite a pull down. They are also looking in forms of technicals, not overextended. Cerence a bit it's not as overextended, but it's not, I want to say, as attractive as the other two. Shopify, same. It's not crazily overextended, but not as attractive as the other two. I do believe in this list I am gonna enter into Roku at the end of this week. This one's looking very juicy at these levels, and at least Shopify, even though Shopify is not super cheap in my opinion right now, is one I wouldn't mind dollar cost averaging right now and increasing my overall exposure. Obviously, if we get better buying opportunities for Shopify, I would buy a bigger positions, but right now these are all my weekly small positions to just continue to make my portfolio work for me. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.